Shishir says, if a married put is not working out, do you have a timeout whereby you liquidate early prior to the put being assigned? I bought WDAY recently at the top and liquidated it as I had a feeling it was not going to work out. Bought it at 206 and closed it at 195. Put was the September 210. Shishir, I think that was too soon. So, workaday. You've got 100 shares. I'm just going to use 100 shares naturally. It's just easier to do the math here. Was it 206? And the put was the September 210. And sweet. You had another drop today. Here we go. And I'm sorry. So the put was at 30.10. The stock's at 182. So you might have paid around $18, $19 for this put. I'm going to give you $18.50, just as a gauge looking at the chain and the current prices. Good controlled risk, 6.5%. Stock was at 206. I'm going to link to the stock chart again, folks. Just want to check something real quick. Okay, so you've been in this worst possible price. I got you. Oh, you paid 25. Okay, let's adjust that. But let's look, now that we're here, we're going to take a look, Shishir. Worst possible price, not a problem. Stock was here, had a little lapse, and then we've been straight down. And yeah, you're down to 176. I see what you're saying. I like this though. Okay, that's Alessandra. That's sort of what I was talking about with Paramount. That's what I want to see, is sort of this smoothing out the MACD and hopefully seeing another crossover as strength maybe comes back into the position and starts to move back up. That's when I might look to enter a married put, if I was entering a married put on Paramount. But again, I already gave my thoughts on that. Okay, so let me clear this up very quickly. It's the end of April, beginning of March, okay? You sold an April 210 call at 155. Okay, the prices are relevant, Shishir. Okay, so we're not going to go that deep into analysis on this position because, as you mentioned, you already liquidated out of it. April 1st or so, you know, fool you once, shame on you. Fool me twice, shame on me, right? Okay, but April Fool's Day, getting in at 206, the worst possible price. Here we are at May 12th. So we're 42 days into the trade. I don't know what was going on with Workday. General rule of thumb, as discussed in the blueprint, the first two chapters, and also later referenced in the Exiting the RPM chapter, what Ernie and I like to do, and what's discussed in the blueprint, is a 20-day check-in. First 3 weeks, 21 days or so, 20 to 21 days, first 3 weeks in the trade, April 1st, so around April 23rd or 24th. When I open a married put position, and Shishir mentioned this, he said he didn't think it was going to work out, so we bailed. There's nothing wrong with that, because you probably, that risk was higher than we should. Let me, you said you paid 25. I'm going to ignore the 155 you collected, but you said you paid 25 for this put. And when you liquidated it, when you said you did around the 195 mark or so, your maximum risk was 9%. Within 20 to 30 days, you probably got out with what? A loss of 4.5%, 5% max on the trade. Okay, that's not too bad. That's manageable. But what we look to do, what are the goals when we do this? We're looking, and this is going to lead right into Victor's question, which is going to be a third discussion on married puts this week, which is perfectly fine. What we look for in the married puts is to make 1% to 2% per month, either realized gains through income methods, selling a call, adjusting the put, lowering the risk, or even in unrealized gains. If I had bought the stock at this point with the put in place and had a 9% risk and the stock moved up to here, in 4 days, I've probably already made 3 to 4% on the trade, because the put's not losing any time value yet. That's why we're buying that 217-day out put option. All right, so that's what we're looking to see. Now, in the first 20 days, let's just say it's around the 22nd or 23rd of April, which would put us right there, okay? You have a stock at 206 and it's now trading, hey, below 195. You probably got out somewhere over here. Now that you mention it, you'd have gotten out over here. So you're right within that 20-day rule. You said it wasn't working out. You closed it. You took a loss. The caveat to this 20 to 21-day rule is there anything coming up in here? And it doesn't look like it, but what I mean is if I got into a stock position and a married put, excuse me, and it didn't work against me, but I had earnings coming up over here, even if it kept declining, I might be okay holding it to this time frame because I'm looking for that catalyst that can maybe reverse it. And if it doesn't and it drops further, what do I have? I have more of a loss than I had here. That's true. But I'm probably not at the maximum loss on the position, and I only would have opened that married put trade, even if it had a risk of 8 or 9%. I would have been comfortable losing that amount in the worst case scenario. That's why we use that structure. That's what we look for in those cases, okay? What you did was correct. It falls right within the direct definition of the blueprint. Within 20 days of the position or so, you felt it wasn't going to work out. You were seeing the decline. You got out here and saved yourself some money even with the put in place. And you had the call sold against it too, so that helped too. I can't fault that at all. I think you did the right thing. You can overanalyze these things like crazy. And you can say, looking at this chart, you could have just sold the stock here at 195 and taken your $11 loss and just left the put open. And you would have gained another 10, 11 points on that put, and you'd be fantastic. Okay, but not every time you see a chart pattern like this does it work that way. You could have sold the stock here for an $11 loss, thinking it was going to continue down, and then the stock reverted back up, and now you lost more on the put as well. Okay, so there's nothing really wrong with this, what you did by liquidating. Okay, Shishir, that's all I'm saying. You had the protection in place to begin with, and that was fine. You analyzed it in 20 days or in your time frame, or news came out, or you had, lack of a better term, market jitters, and you exited the position. You took less of a loss than you would take today. I can't fault that. I can't say that that was wrong in any stretch of the imagination. Okay, it doesn't matter if you closed it in just a few days. And we're not going to overanalyze of, oh, I bought the put here, sold it here, bought it back here. If you kept doing that, you said you liquidated out of it, so I'm assuming you liquidated out of the position. That's what I'm focused on, okay? Maybe a few days, maybe it was too close. But again, it was still less of a loss than you took. You made, all I'm saying is you made the right choice. You have the proper structure in place. I can't fault that. Our rules, I just explained, that's what we do. You don't have to follow that. Anytime a stock can show you a hand that you don't think is right for the structure you're in, and it's best to get out in that structure. And well, this isn't really an in-depth concept here. Follow-up from Victor. Okay, sorry. Victor says, I've been out of the loop for a few months. Since you and Sample RPM covered married put portfolios. He said, since you and Ernie started to build your married put portfolios, would you say you profited about 1.5 to 2% per month? Yes. An example of leading back to what I just discussed with Shishir. That's not it. I apologize. All right. So we've had a position close for profit. You see here, we're down on some, we're up on some. Newmont Mining, I don't think this is not correct. I do apologize for that. That's not correct. Let's jump over real quick. Well, let me show you the AMD position first. I've been at AMD for 56 days. Bought it at 96.45 and it's at 95.26. And we bought January 110 put for 23.05. That's also down. Why? Because we've been in it for 56 days. But also, as you may have known, watching AMD, I know some of you have been trading it, not quite the worst case scenario. But we got in here. Within a few days, the stock ramped up to 100, 101 almost. I should have done an income method at that point, and I didn't. A little hiccup, stabilized, and then here. Now let's pause right there. That's about the 20-day mark. Why didn't I just close the position here? is because I knew in another 20 to 30 days, that's when earnings were coming out. Now, the stock continued to move down. And I considered, and it should have, I considered rolling down the put at this point to take the profit off it on the position to lower my cost basis from the original 96.45 plus the put price down to about this level at 92 would be the total cost basis at that time, Victor. And then a little hiccups, earnings, and then the positive reaction after the earnings event. And there we are there. Here and here, I'd be on a profit on this had I used income method number 9. Okay, I just wanted to use this as an illustration to show why didn't I close this position on this 20-day rule that I'm talking about for AMD, because I'm still bullish on the stock. I still think it has a chance to reach these levels and more, even though we've got a little drawback today, some of those more fears that came out, Victor, that we talked about. But again, that's sort of the structure that we're looking for. Now, let me go back to the radioactive trading portfolio. The NEM position here is at a 7.2% profit. Fortinet is about 3.9%. We opened that on 3/24, so it's been about a month and a half. Yeah, 1.5 to 2%. These two are lagging, and explained why AMD is lagging. This one we've done 2 income methods on. We've lowered the risk from 6.5 to 5.1%. Why is that important, Victor? Because even though this is at a liquidation loss right now of 2.4%, if I closed it, we've been in since 3/23, so about a month and a half, and we've lowered the risk by 1.4%. So it's about 1% per month, right? We're roughly 45 days in. We've lowered it by 1.5%, so essentially it's about 1% per month. Not 1.5 on this one, but about 1%. And, this one here is moving along. This one here is exceeding, it's above that 1.5% for the month and a half. And AMD is lagging because of the reasons I described. And, I'm sorry, earnings positions, of course, 11.8%. This one, I don't know what he's doing with. I'll have to get his thoughts on that later. And 5.7%. But I'm just going to go to the track record real quick, Victor, as you mentioned. You're going to see a little bit more information than you do here. You're going to see the information that you see as a Fusion subscriber. So the 9.2%, we're in for 97 days in Starbucks. Yeah, that's 3% per month. And Anet, Arista Network, 7.9% in 5 months. 1.3. Is that what that works out to be? Take a look here. Yeah, so the put, we were in it for 160 days. I'm sorry, so about 5 months and 10 days. Sorry about that. And everything's hiding behind everything today. All right, so 7.9% return. I'm sorry, folks, in 5.2 months. Let's just call it that. 1.52% per month is what that one is. That was on target. Now, what about this one? Well, I lost. I gave up some of the profit I had on Arista because the stock fell 30%. It was Schwab during the banking issue, collapsed 30.9%. We only lost 6%. And in both cases, the return that we had during that time period in the S&P 500, we were outperforming those, outperforming it here. Okay, missed the boat here. But that's back into 2021 and 2022. But recently, been outperforming over the time period the performance of the S&P 500, same time frame reflectively, and just work some of those numbers roughly to show you what I was talking about. So I'm still in that wheelhouse of 1 to 2%, maybe not as high as 1.5 as I've been targeting in that case, Victor, but it's going. And yes, there's a lot of different advancements that are coming up for courses, materials that you mentioned on spreads and others, plays around earnings. There's going to be a lot of products that are coming out this summer, as well as a lot of other presentations and webinars we've been working on based on YouTube questions. So just want to keep that there. But yes, I'm hitting my targets. Ernie's actually doing better than me, though it's not. I don't think it's reflecting properly. I'll ask him about that, Victor, and get more details. We'll probably do a Fusion summary. I was going to do that today. We kind of already covered it. ASO has dropped further than I wanted. I'm glad I didn't roll down the put when I was expecting it. when the stock was at 61, I was going to roll down from the 70 put to the 65, as I mentioned. We already canceled some of the risk on the trade with an income method. But it started to bottom out where I thought it was a good idea to do it. And then today's events happened after the market started up and then pulled back down. So I'm going to late a little bit at ASO. Fortinet is doing exactly what I want. I'm probably going to roll this May 70 call. We sold it for 210 when the stock was at 68.90. And I can buy it back now for 18. I'm probably going to roll it to the June 2nd, I think, series, 70 strike again and get less, only about $1.40, but we're going to keep lowering this cost basis here, lowering that risk on the trade. The Newmont mining is just simple milk and go at this point. We've got the 45 put that's decaying to 0, 35 days. I'm just selling a call week by week against it. We're getting about 70 to 87 cents, so about 1.5% per week in premium. The way Newmont's been going is exactly what I've been lucky. Excuse me, so I've been catching it right by selling, having the premium decline. We sold it 7-8 days ago here, as I mentioned. That 50 strike call, we rolled from the 49 call when this started to happen up to the 50, rolled for a credit. And as you can see, we can buy that credit back now. So maybe I'm going to probably go back to the 48 call and just week by week by week by week. That's all I'm doing for the remainder of the put cycle, just trying to generate 50, 60 cents. As you saw, we've been lowering the risk on that position. We can liquidate right now for a 7.2% return. We're bulletproof to, 1.8%. But I'm just going to keep knocking that down with the premium week by week by week over the next, probably not full 35 days, Victor, if you wanted to know. I'm just going in depth for you. But probably just in that case for the next maybe 2 to 3 cycles. Probably 3. And if I got assigned, I would just take it. If I would have been assigned at this 50 strike, it would have been a 10.9% return. I would have just taken that and moved on. But had some market pullback here. As the market got stronger, the mining stocks got a little bit weaker. The market got a little bit weaker, so maybe we'll start seeing the mining stocks getting a little bit stronger. Again, I could do one more.